Well, Satyam's shares tumbled more than 75% after Raju resigned. Haslinda Amin has been following that story, and she joins us with more of the details. Haslinda, this came as a huge shock, given that this is one of the bellwether companies for India.
I mean, you're right, Paul. Definitely a challenging time for Satyam, as we heard from the interim CEO. Tumultuous was the word he used. And, you know, the implications, though, go beyond just Satyam. Attention will be on India Inc. as a whole. If it can happen to Satyam, well, the supposed five-star company, why not others? I mean, Marshall May of Emerging Alpha says all companies lie about their earnings. I mean, look at what happened in the U.S. It started with one, then it spread like wildfire. In any case, irony of ironies, accounting trouble at a company whose name means truth, in the words of India's markets regulator. It's horrifying. This could possibly be one of the biggest setbacks for the country. Now, Raju himself says he spent several years inflating profits at the company's main business. What started as a small cover-up escalated to $1 billion worth of fake assets. That prompted him to try and sell 2 units to plug the hole. Now, the scandal unraveled in the past month because of several reasons. Shareholders blocked acquisitions, a World Bank ban stopped it from bidding for orders, and 4 directors quit. In Raju's own words, it was like riding a tiger, not knowing how to get off without being eaten. Now, while shareholders are asking how this happened, one investor says there's something familiar about the scandal.
I think it's pretty typical of the story you see from large corporations that have had fast growth, especially if they've had a long term of fast growth. Sometimes the investors get to expect more growth than is possible. The owners, if it's a single family or a small group, controls that process, and sometimes they get outside the limits.
News of Satyam's accounting debacle sent its shares in Mumbai tumbling a record 78%, a 10-year low that wiped out billions of dollars in market value. Talk about wealth destruction there. Satyam ADRs plunged 90% pre-market. The shares were then halted from trading. The New York Stock Exchange says it's evaluating the news. Goldman Sachs, Citigroup, HSBC and Credit Suisse all suspended coverage of Satyam. The National Stock Exchange removed Satyam from its main Nifty index after the benchmark slumped more than 6%. Now, some investors say the Satyam scandal is likely to continue to weigh on the Indian market. The Sensex, as you know, dropped 7% yesterday after having its best start to the year since 2000. Paul, strictly on paper, Ramalinga Raju is an ideal chairman and an alumnus of Harvard Business School, named Entrepreneur of the Year in 2007 by Ernst & Young. Really difficult to tell these days.
It certainly is. In fact, Satyam won the World Council on Corporate Governance Peacock Award only back in September. That award's now been withdrawn. But there will be a lot of investigations, not least because the family sold a lot of its shares in the run-up to this coming out, didn't it?
Well, that's right. I mean, you know, right now people are just trying to make sense of the whole thing. How did it happen? I mean, the accountants must count for something. I can only imagine.
Yes, that's one accusation I've heard from one of the investors, saying the accountants really have a lot of questions to answer over this one. Many people do. Haslinda, thank you very much for that. Haslinda Amin there in Singapore.